Why are we seeing persistent inflation and weak economic growth? A lot of the messages that we read in different financial outlets start with the premise of surprising negative numbers in terms of GDP growth and surprisingly high levels of inflation. However, there is no surprise if we look at what has been going on with the economy. Monetary policy has not been restrictive. Monetary policy, in fact, has been hugely accommodative. And what this graph, courtesy of Ned Davis Research, shows is that money growth has actually recovered very aggressively after the pandemic, and that we had a small slump in M2 in the United States. However, net liquidity, treasury injections, and the window of discount of the Federal Reserve, all of those elements have kept money supply not just elevated, but actually now growing, therefore persistent inflation. Let's go to the next graph, which explains why are we not combating inflation adequately. In the next graph, what we see is the insane level of deficit spending of the US government, and that is printing money. Deficit spending is printing money, and that is certainly offsetting entirely the reduction of the balance sheet of the Federal Reserve. Think about this. The Federal Reserve's balance sheet has declined only $1.7 trillion. However, if we look at the level of deficit spending, it has been of about $1.5 to $2 trillion per year. Therefore, deficit spending, more money printing, has exceeded any level of reduction in the balance sheet of the Federal Reserve. And rate hikes have not mattered for the government. The government has not reduced expenditures, so rate hikes have impacted families and small businesses, but have done nothing to curb the money growth coming from the government. Let's go to the next graph. What we see is the destruction of currencies relative to the US dollar. The US dollar loses purchasing power, higher inflation, persistent inflation. However, what we see as well is the destruction of those currencies that have been sold to us as MMT solutions, the Japanese yen at 35-year lows. So currencies are actually weakening relative to the US dollar, but more importantly, what we see is that what is happening with the US dollar or with the euro is only in relative terms, but the US dollar and the euro are also losing purchasing power. The only one that is keeping low inflation and relatively stable valuation relative to the US dollar is the Chinese yuan. However, it has capital controls, so we need to take that into account. Let's go to the next graph. The destruction of money is very evident in the bond market. What we see is that the US aggregate bond index and the Euro aggregate bond index, this graph courtesy of Bloomberg, are all down and have not recovered from the slump of 2022. Furthermore, what we see is that the only index that is doing relatively well is the index of high yield bonds, but still a very weak performance relative to the equity market, Bitcoin, or gold. And if we go to the next graph, when we go to the next graph, what we can understand is this process of monetary destruction in a very visual way. If you look at this incredible graph, courtesy of the Heritage Foundation, we have gone from an annualized 1.8% inflation trend, which was completely obliterated with the destruction of money of 2020 and the enormous and reckless government spending in the post-pandemic that absolutely destroyed the level of previous trends, and what we see is that the trend has actually gotten worse than the previous, that this process of disinflation is actually not real. It's 3.1% annualized inflation. Let's go to the next graph, and what we can see is what we can do to protect ourselves. Gold, Bitcoin, that can help us to invest, protecting ourselves from monetary destruction. And what it's showing basically is that gold is following money supply growth. And what we need to understand is that with governments spending like they are, with an enormous deficit spending, all of that is making citizens poorer. Is making citizens poorer with the inflation tax. That the inflation tax is not a coincidence, it is a policy. That the inflation tax is there precisely because it's a transfer of wealth from savers and from deposits to those that are in government, continuing to bloat government spending in a currency that loses purchasing power. So it's basically literally diluting wealth and making everyone poorer. Keep defending freedom. Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.